Hello everyone, hope you guys had a wonderful weekend. Hope you guys had a wonderful day. In today's video, we're going to take a look at what the next steps are for the market. Obviously, Apple, we're going to take a look at that. We're going to take a look at the dollar, the S&P, the NASDAQ, the Russell, and the bonds. All right, so without further ado, let's get started with the video. So first of all, I took a few days off. This was the first time that I took more than 2 days off in a row in over 7 years. And it was much needed. It was a blessing, honestly. I got a lot of rest. I worked out a lot, and it was just really nice to see my team and everything just get everything done regardless of me being there. And it was, it's very, very nice to see that. And yeah, I needed it. It was very, very good, and I hope you guys had a wonderful few days as well. I definitely missed streaming. I definitely missed making the videos and everything, and I hope you guys are still good. All right, so yeah, I'm back now. And yeah, that was really, really fun. So yeah, I probably not gonna have another vacation for another few years, so let's see what happens. But yeah, let's get started with the video now. All right, so first of all, everything is basically teetering at levels of support or resistance, but Apple is the only thing right now in the market that is showing extreme overextension. And we look at these periods of overextension as very good signals of what is yet to come in the market. So when something is very overextended to the downside, there becomes a much higher chance that there's a bounce. And for example, if there is something very overextended to the upside, there becomes a much higher chance that we fall. Okay? So currently right now, Apple is clearly falling dramatically. It's closed and opened outside of the lower level of the Bollinger Band for 2 days in a row. So what we did earlier on was we bought 178 calls. We bought 180 calls, and then we sold those. And then now I'm holding on to Lottos overnight that expire Friday for 182.5. And the reason for that is because if tomorrow we end up bouncing as well, then that's great, because clearly right now, there is rarely ever a time. I scrolled years and years and years to see when Apple, basically how Apple responds like this. And it's really rare for the next day to not also be green. So I'm assuming tomorrow should also be green on Apple. Regardless, it's a very, very small lotto risky play. We sold our original position already for profit. We bought that at the bottom, so that's great. So another reason why I was bullish on Apple today was because we came down to this it's keeping it very, very simple. We came down to this very important level of support here. And this coincided with the lows back in May, and then also with the high on May 19th. So this is a very, very important major trend line, major level. So Apple came down, we started holding around that level, and it made sense to go long here. We're very, very overextended to the downside. This is in no way, shape, or form the time to go short. Time and time again, you do not go short at levels of support. You either go long with a tight stop loss, or you wait for a bounce and play alongside the momentum. But personally, right, I would have rather go long. That's why we went long, right? Because Apple is already down about 10% since the drop, right? And there's no point of shorting again down here, because how much, what is Apple going to drop? 20%? No, it's very, very, very rare that Apple would do that. So it makes more sense to go long, in my opinion. And if Apple is this overextended to the downside, there's a good chance that it's going to bounce. And I'm assuming that this bounce would also translate into the overall market. But I'm not going long the overall market. I'm only going long focused on Apple because it has the highest chance for a bounce. Okay, so that is that for Apple. I'm bullish on Apple at these levels. The next most important thing that we have to look at is the dollar. So the dollar clearly earlier on in the day was very, very strong. But what happened once again? It failed to break and close above these prior levels of resistance. And what did it do instead? It wicked. So it wicked up and it could not break and close above these levels of resistance. So the dollar is very relevant because when the dollar is rising, then it is bearish for the overall market. And what we needed to see is the dollar break and close clean above these levels of resistance. The fact that it didn't, and the fact that it's failing at levels of resistance, is not a completely bullish sign on the dollar. So that also alleviates the downward pressure on the market. If the dollar basically closed above these levels, then I wouldn't be going long anything, because if the dollar breaks above levels of resistance, that is very bearish for the market. And since the dollar is at a level of resistance and didn't break above, that's a better sign. Okay, so there's that for the dollar. Let's go ahead and take a look at the bonds. So the bonds are interesting at these levels. They're not entirely relevant because they're not at extremes, right? But the bonds are important because they have a more correlated relationship to the market. If the bonds are going up, then the overall market is also going to be bullish. So currently, right now, obviously we made a bottom on the bonds, overextended to the downside, and it's bouncing. Okay, had a retracement, continuing to bounce up higher. So it's not entirely terrible what the bonds are doing. So the bonds look decently bullish. That could translate into bullishness for the market. Okay. Next, let's just simply take a look at what the S&P, the NASDAQ, and the Russell are doing. All right, so this is a daily chart of the S&P. Quite honestly, this can honestly go either way. So you could either look at this as a sweep, because we wicked below prior lows. We sweeped below these lows. We came back and tested almost the low of the breakout candle, right? So this was a major level of support. Technically, it's a major level of support, right? But this could also, you could also say that this just looks very, very weak and it could continue falling. So in the short term, in the most immediate day to day, this is very, very difficult to say which direction it's going to go. We could even retest back up to 452, or, you know, we could have a baby bounce to 450 and continue falling lower. Either way, the SPY is not really giving that much a clear-cut understanding of which way the market is going to go. All right, and I would argue it's the same across the board for the NASDAQ and for the Russell as well. So for the Russell, also, you can argue that this is either a bullish reversal, a retest of prior level of support. Okay, so July 14th low, prior level of support here. You could argue that this was a retest of that support, and we painted a bullish reversal candle. Okay, so you could see that we might get a bounce back up to 194.50, but overall this is still a bearish pattern. So we might only get a bounce up to like 194, 193.50, and then continue falling lower. But it's tough to just be blindingly bullish or blindingly bearish on either the SPY or the IWM. And this just further exemplifies the reason why I'm easily more bullish on Apple. And it's more comfortable to take a trade on Apple than it is to try to go long or short on the SPY or the IWM. And then the NASDAQ, it's the most interesting. So this is a chart of the NASDAQ on a daily. Okay, so the NASDAQ is most interesting because not only is the NASDAQ at a level of support, a very major trend line level of support from back in March, right? So this trend line began in March, and we had touches here, it basically came and touched and retested there, and now we're back to this trend line here. So it touched basically 3 times prior. Okay, and not only is this trend line as a support, obviously, it coincides perfectly with the lower Bollinger Band, and it also coincides very, very closely to this 50 simple moving average. So the 50 simple moving average, the lower level of the Bollinger Band, and a trend line support. So obviously, right, if you weren't looking at any technical indicators and you were just looking at this candle, just looking at the candle, it looks disgusting. you can't really trade based off of that, because you're either waiting for, you can't short here because it's holding this level of support. It came and tested this level of support. So you can't go short because it's at a level of support. And, you know, the only time that it really made sense to try to go long was closer to this level, to this trend line, or again, to this level of support. But aside from that, now you definitely can't go short. And now up here, you definitely can't really go long. So it's really disgusting on all three of the major indices. But the most easiest sort of opportunity was just going long on Apple, because it's the most overextended. It's giving the most signals that it could have a bit of a bounce higher. And if the NASDAQ does continue to bounce off of this trend line, if the SPY does continue to bounce off as well of the support, and if Apple holds this 176 level and breaks above 180, we could easily see 180, 150. We could easily see 182. And I'm expecting tomorrow to be green as well. I would be very, very shocked. So if we don't retest 181, so look, this is what I think. We should be testing 181.50 before we break below 177. If we break below 177 before we touch 181.50, then that's going to be really, really interesting. And if that happens, then a lot of people are going to become really, really bullish, really, really bearish. And that might actually be another really good opportunity to go long, because everyone is going to be like, wow, we didn't get a bounce. It just capitulated even further, just fell even lower. That actually might be a better time to go long as well. But currently, I'm bullish on Apple. The NASDAQ is at a level of support. The dollar is failing to break above levels of resistance. And the SPY and the IWM aren't really doing much. And we have CPI data coming out on Thursday. So tomorrow, we're still in the clear. There's not much news. And should be good. All right. So, yeah, you know, if we get a bit of a bounce, that would help. Our lateral calls, we have 182.5 calls. Should be good to go. All right. So I hope you guys enjoy. Hope you guys have a wonderful night. I hope you guys have a wonderful rest of your day. And I will see you guys bright and early tomorrow morning. Thank you guys so much. Have a wonderful time. Thank you.